Good morning, everyone. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Education Division or Taxpayer and Education section of our Taxpayer Services Division. And I just wanted to welcome everybody to today's presentation on filing the franchise and excise tax return. We got a lot of information to cover today, so we know that we want to get through all this and try to answer as many of your questions as we possibly can. But in the interest of time, I'll keep my comments short and introduce to you Miss Katie Julian, who will be walking you through today's presentation. And then we have a couple of guests with us here today from our audit section, two different groups here. We have Mr. Byron Swindle, who is in our audit division. He'll be here to help us with some technical questions. And Mr. Carl Sauter, who is a communications auditor in our Taxpayer Services Division. Also online with us today is our Assistant Director in Taxpayer Services, Dan Vinson, who'll be helping me with chat questions where we can on this. When I say where we can, it's because this information is very technical. It's going to be a lot of information to give you today. We're going to do our very best to try to answer your questions, but at the very end, Katie is going to definitely tell you how to get specific answers to your questions that we are not able to get to today. So anyway, with that in mind, I'll be quiet and let Katie take over. And thank you guys very much for attending today.
Thanks, Billy. It's good to be with y'all today. Just want to give a special shout out to Carl and Byron, who were very helpful with putting this whole presentation together. As Billy said, filing the F&E return, which is our topic today, it's a real in-depth topic. We're just going to touch on the highlights of filing the F&E return today, and I'll mention this again at the end, but there's a short survey when you leave the webinar, and one of the questions on the survey is, do you have any ideas for topics for future webinars? I would love y'all's input after we get through this today. Again, just kind of touching on the various aspects of filing. If there are topics about filing that you would like us to dedicate a whole webinar to, put your vote in for that at the survey at the end. I'm interested in seeing that feedback to see if we should plan a future webinar on a specific topic about filing the F&E returns. So this webinar is being recorded, and you see in front of you, let me change over and get my little laser pointer. We do have a webinar video library that this recording will be in as of later today or maybe tomorrow. This QR code right here, there's also a link in the chat. This is a QR code to a PDF of this presentation. You can't click on these hyperlinks that we've got in here directly from your WebEx screen. You'd have to download the PDF. So this is how you download that PDF. If you need CPE credit, we will be offering CPE credit for this, and you can request that on your exit survey as well. As Billy mentioned, we are going to provide this again to you. We're not going to be able, we got a lot of people in here today. We're not going to be able to get to all the questions, but you can email us at revenue.support@tn.gov if we don't get around to your question, or always call us. Our general tax line is 615-253-0600. We do have chat down during the slides, but we will turn it on when we get to the question and answer part about halfway through here today. So, all right, with that being said, we'll go ahead and get started. Here's another kind of larger QR code for you if you didn't grab it from the previous page. But as I said, today we're talking about filing the F&E return. The information that we're presenting today is current as of today, October 28th, 2025. Every year there's changes to tax law in the Tennessee General Assembly, the laws that they pass. So if you're watching a recording of this somewhere, a year from now or in 2026, there may be some law changes. We've got a couple links here to our tax manuals, revenue help articles, and then legislative summaries by tax type. So if you're wondering each year, what happened with F&E tax, what changed after our general session wraps up and the governor signs into law everything that was passed, we have a great resource for that. And every summer we also offer a legislative summaries webinar. So today we're going to be talking about filing the F&E return. We're going to discuss the filing period, the different dates associated with the different aspects of F&E, how to file payments. We're not going to dive too deep into schedules today, but just talk about some common misunderstandings with some of the schedules and common mistakes that are made. We're going to talk about closing the F&E account. We're sharing lots of resources today, and like I said, about halfway through we will have a chat and get to some of your questions. All right, so first thing, this is a lot of info, y'all. It's kind of a busy slide, and I apologize for that, but it was a way to get just the F&E basics on one screen. I know that here with us today in attendance, we've got some new businesses that don't even really know what F&E is, and we've probably got some seasoned tax professionals that are very aware of what F&E is, but just want some guidance with the filing. So we kind of have a large range of knowledge in here with all of you attendees. So we're just going to kind of touch on some basics real quick. F&E is a combination of the franchise tax and the excise tax combined to make F&E. Franchise is basically a business's net worth. Excise is net income or loss. The franchise tax is going to be 25 cents per $100 of Tennessee net worth, and then excise is going to be 6.5% of Tennessee taxable income. F&E is going to be required basically if you are required to register with the Secretary of State, you're going to be required to register for and file F&E. That includes corporations, S corps, LLCs, limited partnerships, REITs, captive REITs, business trusts. Not required are going to be sole proprietors, general partnerships, and there are some entities that are exempt by nature of what the entity does. So F&E is going to be subject based on the prior of either the date the business formed with the Secretary of State or the date your operations began in Tennessee. Whichever one of those comes first, that's when you're going to be liable for F&E tax for the fiscal year that date falls within. Just some bullets here. F&E is always due on the 15th day of the fourth month following the fiscal year end. We're going to talk about there's the option to file an extension for that. There are periodic estimated payments that may apply to your business. We'll discuss that a little later. And definitely a minimum tax of $100 is due every year, regardless of if the business has any net worth or net income or loss, maybe didn't do anything. The minimum is 100 as long as the entity is active with the Secretary of State. Got a couple of links here, a link to an F&E Basics webinar and also a link to our fantastic F&E tax manual. So the filing period, again, a lot going on here. We're going to start here. This timeline assumes a business has a fiscal year end of 12/31. As I just mentioned, the return is due on the 15th day of the fourth month following the fiscal year end. So for a 12/31 fiscal year end, that looks a lot like April 15th, right? Tax day that we all know. So by April 15th, you will have had to either file and pay your return, done deal, or file and pay that extension. There is an exemption. Oh, sorry, I'm kind of skipping ahead. Fire exemption renewal. We'll talk about that, or the extension. I will say that it's an extension to file, not an extension to pay. So there's more information about that coming in a little while. Or by April 15th, pay that $100 minimum. With the extension, it is a 7-month extension that was passed a few years back. I know a lot of CPAs love that. So with that 7 months extension from April 15th, that puts the extension deadline to file the return on November 15th. On the bottom part of this timeline, you're going to see the estimated payments. Sometimes they're called quarterly payments, but that bothers me because they're not exactly quarterly. So we're going to say 4 estimated payments. Your first one is going to be due on April 15th, the second one on June 15th, the third on 9/15th, and then the fourth estimated payment is going to be due on January 15th. More about exemptions and extensions coming in a little while. So how to file? You can file, here's a link to approved certified software vendors. You can always file and pay on TINTAP, our Tennessee Taxpayer Access Point. You can manage all your tax accounts on TINTAP. We always say we recommend that business owners have a master access to all of their tax accounts on TINTAP. Even if you hire someone, a tax professional, to do all of your tax filings for you, we recommend, highly recommend, that the business has a master level account access to all of your tax accounts, so you can at least just see at a glance whether everything's in the green or with, unfortunately, sometimes get in the red. Even if you have tax preparers handling everything, it's good for you to be able to see everything at a glance. Our IRS modernized e-file. So this allows tax preparers to include the state, Tennessee's state F&E return and any associated payment with the return that's electronically filed with the IRS. So you can see a list of all the different returns regarding related to F&E that can be filed through MEF is what we call it. The regular franchise and excise tax return, the FAE 170, the extension, quarterly declarations, exemption renewal, and the financial institutions and real estate investment, FAE 174, can all be done via MEF. All right, first thing we're going to dive into here are extensions. I mentioned it's a 7-month extension, and it is going to be granted if payments are made by your due date. So again, for a 12/31 fiscal year end, by April 15th, you have to pay the lesser of either of these three things: either 90% of your current period's liability, 100% of the previous period's liability that's annualized to 365.25 days, or if the previous period does not exist, $100. So making the payment will automatically grant you the extension. That's what this says right here. Once the financial requirement is made, the 7-month extension is automatic. And these payments for the extension can be made via TINTAP or MEF. And we'll show you how to do that here in just a minute. Estimated payments. So you're going to be required to make an F&E estimated payments if the combined F&E tax liability of $5,000 or more for both the prior and the current tax period, tax year is met. So, and that is after credits. You see again the timeline a couple slides back explain this, but this just shows you the first payment is due on April 15th, the second one on June 15th, the third one on September 15th, and the final payment on January 15th of the next year. And again, all of this is assuming the dates that I just mentioned at least are assuming a fiscal year end of 12/31. So how you make estimated payments, there is a worksheet here. If you've got the PDF, if you've downloaded the PDF of this presentation, you can click on this as a link over to the F&E payments worksheet. And so you're going to make these, you have an option to either make 4 equal installments, or you can elect to use an annualized income method for the calculation. Now that would be helpful if maybe your business is very seasonal. Let's say you have a business that's makes all your money, most of it during the summertime, and you want to you don't want to have to pay equal payments throughout the year. It might behoove you to check out the annualized income method of calculation for these estimated payments. So making both the extension payment and the estimated payment again can be done through modernized e-file MEF, but if you want to do that on TINTAP, here is a link to TINTAP, the logon page, and without logging in to your TINTAP account, even if you've got one, you can make estimated or extension payments very easily just before even logging in by clicking on the payments tile that's on the TINTAP page, and then it'll walk you through some questions. You have to give information about your account, such as you'll want to have your entity ID number, so your FEIN handy. You're going to want to have your F&E account number handy and your contact information. You'll provide all that, and you'll get to a payment page, and you can see here you have the option to either make a return payment, an estimated payment, or an extension payment. Pretty self-explanatory there. So renewing exemptions, a lot of people are not aware that certain exemptions must be renewed each year. Here's a list. I'm not going to bore you with reading this whole list. I kind of have highlighted or bolded what each one is, but real common ones here. Definitely fonts, the family-owned non-corporate entity, that has to be renewed each year. And the penalty if you don't renew it on time is pretty high, so make sure you do that by the due date. How you renew your exemptions, very easy. Again, you can definitely renew exemptions via modernized e-file, but on TinTap, here's the link to TinTap Home again. You click on the exemptions tile and then click on apply or renew F&E tax exemption. Again, just like with paying your extension or estimated payments, you're going to need to provide some information about your account, your EIN, your account ID, your legal business name, stuff like that. And it's a pretty easy process. But don't forget to do it because you don't want to have to pay penalty and interest for failing to renew that exemption. All right, we're going to dive in now to the return, some schedules. Again, if we wanted to have we could probably take a whole week to discuss each and every schedule on the F&E return. This is just going to be an overview today. Schedule A is the franchise tax computation. Again, that is the net worth of the business at Schedule F1 and F2. A couple years ago, our legislature eliminated Schedule G, which was the property tax version, property tax calculation. Now franchise tax is just based on the net worth. So more information about that Schedule G. We're kind of a couple years away from that now, but we do have a webinar dedicated to eliminating that Schedule G. But again, for franchise, the minimum is going to be $100. Schedule B is the excise tax computation, which is the net earnings. Schedule C, we're going to discuss a little bit about that today. It combines franchise and excise tax, applies credits, and determines balance due or refund. Schedule D is credits, Schedule E, payments. We're also going to be talking today about common issues with schedules that feed into several of these schedules. Other common schedules are credit schedules, job tax credit, brownfield property, paid family medical leave credit, industrial machinery credit. We're not going to be diving into those details today. We do have some webinars out on our webinar video library that deal with these credits. There's also Schedule IE, the intangible expense disclosure. FAE 172 are those estimated payments. FAE 183 is the application for exemption or annual renewal. 174 is used by financial institutions or captive REITs. And then we're going to talk a little bit today about FAE 174 and Schedule 170 NC and 170 SF, which are the consolidated net worth apportionment schedules for consolidated filers. So one thing to note, our system often rejects returns for incorrect return type. So it's real important that you pay attention to that. Either the entity is not registered correctly, which causes our system to require the wrong return, or the return is really is the wrong type of return. We're going to hopefully clear up some of that for you today. All right, really busy slide here, but this is a link to all of our franchise tax revenue help articles. This is it. Just take a minute to see here what types of articles that we have. We're going to be going over some of this stuff today, but I wanted you to have in one place just what types of articles we have specifically relating to the franchise tax. Okay, this is a handy little chart. This is also in our franchise tax manual. Basically a flow chart that tells you if you should use Schedule 174 or Schedule 170. First question, is the taxpayer a financial institution? To the left here, if yes, we further break down, you're going to need 174, but if you're going to need 174 SC or 174 NC. So if you're not a financial institution, nope, you're definitely going to use Form 170. Are you a member of a financial institution affiliated group? Yes or no, depends on if you use 170 SF or 170 NC. Single entity reporting and disregarded entities. This is a really hot topic. For every entity is considered a standalone entity here in Tennessee for reporting purposes, making its requirement to file and what it files based solely on its own activity, right? Ownership interest in a pass-through entity does not recreate a filing requirement for the parent of the pass-through entity. Um, Consolidated and combined returns are not allowed. There are a couple of exceptions. Only single member LLCs that are wholly owned by a corporate parent are disregarded for F&E tax purposes. Also, exception is financial institutions filing as a unity group. These are the entities that will file the FAE 174. Same with the franchise tax. We've got a lot of great excise tax revenue help articles. A lot of these are regarded or referring specifically to filing issues, but great help articles here. All persons except those with nonprofit status or otherwise exempt are going to be subject to the corporate excise tax on the net earnings. Big topic here, apportionment. Schedule N is the apportionment schedule. It's very common that we see the Schedule N is left blank. If that happens, then our system is going to default to 100% apportionment here in Tennessee. So if you have any earnings in any other states, it's real important that you pay close attention to Schedule N. Again, if it's just left blank, we're going to default to 100% in Tennessee, which is if you've got earnings in other states, you're going to be paying too much if you apportion it all here to Tennessee. So for tax years, a single sales factor, this is interesting. Schedule S is used instead of the tax if the taxpayer elects single sales factor apportionment. Due to the Tennessee Works Tax Act, which passed a couple years ago, it phased in single sales factor apportionment. So for tax years ending on or after December 31st, 2025, so basically the current tax year we're in, the standard apportionment formula will consist of the sales factor only. All that's been phased in over the past couple years. So starting for this current tax year for 12/31/20 filers, it's going to be single sales factor only. Schedule N1, alternative apportionment, is for taxpayers electing triple weighted sales or special apportionment. Here is a link over to a whole section of articles, of help articles specifically relating to apportionment. Because like I said, it's a pretty hot topic, and I'm assuming here when we get into the chat and questions from you guys, we're going to have a lot of questions about apportionment. So the excise tax computation, there's a starting place in computing the excise tax, and it's net income before loss carryover and special deductions are reported on the federal income tax return. If your federal return is prepared on a consolidated basis, a pro forma single entity return is going to be needed here for Tennessee. From that starting point, adjustments are all made through various schedules, all the J schedules and others. That's how you're going to arrive at that taxable income. Qualified net operating losses may be carried forward for no more than 15 years, and they are never carried back. More about carry forward soon. Computation of your total tax due or overpayment. This is Schedule C. If you overpay, it's going to create a credit balance that can either be claimed for refund or claimed on the tax return and applied towards the liability on that return. You see here a link to how to request a refund if you just want it back. Or like I said, it can be applied on Schedule C, line 16B. Regarding credit carry forward, that's Schedule C, line 16A. You can request that the credit be carried forward to the next year. Schedule E, line 1, request to apply the credit to the current year. And there is a 3-year statute of limitations for credits and refunds. Net operating loss, or NOL. I used to work on the vehicle side here at Revenue, and we referred to NOL as noting of lien, but for tax purposes, it's net operating losses. If an entity reports a loss of income, it's going to create an excise tax credit, right? That can be used to offset future excise tax liabilities for a period of 15 years. Operating losses stay on the entity that claimed the loss. They cannot move to another entity. and they cannot be, I think I meant retroactively here. Credits cannot be transferred and cannot be applied retroactively. A very common mistake regarding net operating losses is the Schedule K add back. If a business does not submit a Schedule K, our tax system is going to add it under certain conditions. Lines 2 and 3 reduce the amount of income on Schedule J, and these lines cannot be used to create a net operating loss. Carry forwards and credits, just wanted to give you a little tip here of a way that you can kind of check and see how things got applied. From the franchise and excise, now this is just a screenshot of once you're logged into TinTap. Once you're logged into your TinTap account, you'll see your franchise and excise account. You're going to click on View File Returns, and then once you come to the next screen, you click on the actual hyperlink into the period. Sometimes you can use this to chase back, seeing like how things might have gotten off if your carry forwards are off somehow. We recommend tax preparers for sure definitely go back and just make sure everything applied the way you thought, because sometimes we will send out an adjustment notice. If our system adjusts a tax return, which is not uncommon with franchise and excise tax, we're going to send out a notice about that. Send a letter, okay? If you're the tax preparer and you didn't get a letter that something was adjusted, we made that adjustment, it can get things off for years to come. So we really think we highly recommend going and checking and making sure it's all lining up the way you thought. You would click on the actual return period, and then you can just see a summary here of what was the tax due, what was the credit, and if there's any balance. If you thought you would pay it the last year, let's say last year's period, you thought everything that your balance should be zero, you had tax liability, you paid it all somehow, a combination of carry forward, combined with credits, payment, all that, you should see zero balance. If you happen to see that there was a negative balance here, or you're in the red for your balance, then that's time to start digging a little deeper. Maybe there was an adjustment notice. I was working with a taxpayer a few years ago where carry forward credits got off several years back that just snowballed and made the company had a huge tax liability just kind of a misunderstanding. So it's real important that you get that straight. I talked earlier about that minimum filing. It's $100. If you are a new business or a business that just doesn't have any, that's inactive or has no income, no assets, you're still going to be required, as long as you have not dissolved through the Secretary of State and closed out your franchise excise account, you're going to be required to at least pay this minimum amount each year. It's very easy to do from TinTap Home, which I don't have a link to here, but I've shared it a few other times. Without even logging in, you would just click on the returns tile and then view return links, and then click on the minimum $100 F&E tax return. You're going to be required, just like the non-log-on extension and payments and all that stuff we talked about earlier, you're going to be required to provide a little bit of information. You're going to need your entity ID number, like your EIN. You're going to need the F&E account number, so on and so forth. Answer a couple questions, and then just make a payment. It's very easy, just takes about 2 minutes to do. And if you are not active but have not yet dissolved through the Secretary of State, you do not want to miss this step, because these can also snowball. And there are oftentimes entities that didn't know they had to do this. They're thinking, I haven't been active. I'm not making any money. I don't have any assets. Not worry about it. 5 years down the road, you failed to do this. You're going to get a call, if you haven't already, from our collections division, unfortunately. So it's nothing we can't fix. If this applies to you and you think you might have missed filing a minimum return, we can help you with that. So on that note, talking about late filing and penalty and interest, there are a few special situations with P&I when it comes to F&E. But with a valid extension and timely filing, only interest is going to be due. You won't have a penalty if you have a valid extension and you file on time. Interest will be due if there is a balance due. So you know how I was talking earlier about the requirements to get that extension, and let's say you paid what you consider to be 90% of what you think you're going to owe this year, or 100% of last year's return, but you end up, once you file, owing a little bit more. If there's a difference there, interest will be paid on that difference. If there's an invalid extension or the return is not filed by the due date, then penalty and interest will be due on the balance of tax due from the original due date. So for that fiscal year 12/31 business, the extension's not valid or they don't file by November 15th, the P&I is going to start being calculated from the April 15th date. Uh, penalty can be waived with request, and you can do that in 10 tap. Interest cannot be waived. The current interest rate is 11.5. The delinquency penalty is 5% per month or partial month with a maximum of 25%, and the minimum penalty is going to be minimum of $15 penalty on any late filed return. All right, this is where it's kind of different than some other taxes with F&E with penalties. If you've got a late estimated payment, that penalty is going to be assessed at 2% per month up to a maximum of 24%, and interest is going to be calculated at the current interest rate. Remember, I was talking earlier about making sure you file your exemption renewal on time. If it's late, even one day, it's a $200 flat rate penalty for late exemption renewal. Here is a link to a revenue help article about how to request a penalty waiver. And as I mentioned, interest cannot be removed by Tennessee tax law. We cannot remove interest. Hey, Byron.
Hey, I just had a quick comment about the late exemption renewal that I wanted to mention. If you file a 170 on time and it's timely and you realize you are exempt, you meet the requirements for one of the exemptions, and then you come back and file your FAE 183, we can treat that as a timely. So you will not get the $200 penalty in that case. If you did file a 170 timely for that tax period, realize you are exempt, and then come back and file the FAE 183, that $200 penalty can be taken off. So if that does happen, just let us know and we can correct that. If you filed the 170 timely, that is.
So is that something, Byron? Thank you for, I didn't know that. That is good to know. Is that something that they can do? They have to contact us for that, or is it an automatic thing that happens after they file that?
I would say they probably have to contact us because
Okay.
if you do the exemption, they'll probably put it in the date that they filed it, but
Yeah.
we can fix that on the back end to make
Okay.
it timely. So
Okay.
if you do fit that situation, we can get that penalty off for you. So you will know $200 for that period or
Good to
those
know.
periods.
Good to know. Thank you. We're going to talk here for just a minute about closing your F&E account. We have a whole webinar dedicated to closing your tax accounts. And really, closing F&E hinges on closing all the tax accounts you have. To properly close F&E, you're going to have to close business tax. If you have business tax, close your sales tax account, all the above. More information about all of that in the webinar that we have dedicated to closing tax accounts. But just a couple things to note here, that businesses that are registered with the Secretary of State are required to file a tax return every year until they officially terminate with the Secretary of State. I mentioned that a couple times today. Even if no operations, even if you haven't done anything with the business, but you register with Secretary of State, that minimum 100 is at least due. So to actually close and receive clearance, it's a two-step process within a 45-day period. Okay, that clearance is only good for 45 days. You have to do these two things: file your final return to obtain tax clearance letter for termination, and file dissolution form with the Secretary of State. Now, there are other things involved with this. Like I said, you also have to close out your other tax accounts. You have to have no balance on no tax liability on any of your tax accounts, all returns filed. But again, more information about that in the webinar we have dedicated to closing tax accounts. I will say that a common mistake is just to do nothing for years, thinking it may just go away. Business wasn't operating. It will creep up and bite you if you do not take care of that. And we can help you take care of it if you haven't filed for, even if you weren't operating, we can walk you through that. Okay, I'm going to go ahead. Billy, Carl, Byron, if y'all want to come back on here, I'm going to turn the chat on. And
Okay, thank you. Katie, good job. Wow. Hey, can you repeat everything you just said, please?
yeah, no. Okay,
Yeah.
chat is on.
All right. So, the comment that I wanted to make, and before we start getting going is You know, we deal with almost 30 different kinds of taxes at the Department of Revenue, which is a lot, as you can imagine, right? But franchise and excise is its own bear. It is sort of that one thing out there that requires kind of like year-round attention for the LLCs and corporations and other people that are subject to the tax because of that estimated tax payments provision. Okay. So we do get a lot of questions, and I think Carl can attest to this too, especially in his unit, with people who are either confused about how to make estimated tax payments, they don't really understand how much they're supposed to make, and all that kind of stuff too. Carl, did you want to comment on that real quick and just
Yeah,
maybe a few hints or something?
absolutely. The estimated payment and extension payments are probably some of the most confusing thing. The safest thing to do is to always just take your previous year and divide that by 4. So the previous year's tax, let's say it's 100,000, you divide that by 4, you're looking at 25,000 per quarter. That's the safe thing to do. So in our computer is programmed to calculate based on the lesser of the 2 years. If this year is not a good year and you've paid 100,000 based on 25,000 per quarter based on last year, you're overpaid, you're in a good situation. If this year's a better year, then you've met the requirement based on your last year. So the best thing to do in that situation, and if it's your first year, you're not required to make quarterly payments until next year. If so, because you have to be at $5,000 in total tax due for 2 consecutive periods to be required to make quarterly payments in that second period. So
Mhm.
your first year, you don't know what you did prior year because you don't have a prior year, then you don't have to make quarterly payments. And the safe thing to do is always to take those payments and the previous year's tax and divide it by 4.
Yeah, that's a great hint there too. I hope that you know, folk, and you mentioned the $5,000 level too, Carl, which is
Mhm.
obviously a key point too. So a lot of the people that may be on this webinar today may be smaller businesses that maybe just started their LLCs and that kind of thing. So they're not going to be at the $5,000
Yeah.
level. And again, that's $5,000 worth of tax, not $5,000 worth of income, that the business made or anything like that too. So,
Yeah.
so that's good too. Guys, one of the questions that someone had, I think Jen in chat, is about when the exemption renewal filings, when are they due? When do they have to have those in? Do we have a flat date that we
Yeah,
can give
I'll
folks on
go
that?
ahead, Carl.
An easy way to remember that is you're filing the exemption in place of the tax return. To not be required to file that tax return, you're putting an exemption in place of that. So it's the same due date, April 15th.
Same due date. Okay, that's easy to remember. Super, super, super.
And businesses have to file that exemption every year. It's not like you file it once and you're good for life. Because your status can change throughout the year. This year you might have passive income. It's not taxable. Next year you might have sold that property, and guess what? You're not exempt for the next year once you sell that property. That's just an example. So you have to file that exemption every year.
Okay, very good. Thank you. What other questions are you guys seeing that we might want to touch on?
Shelley has asked if the tax clearance letter is available in TINTAP. A little bit of a loaded question. It is available in TINTAP, and it's also, you can request one via non-log-on. If you're not seeing it available, or if you go to request a non-log-on, I'll take you over to the website and show you how you can request it. Then you're not clear. So if you're not seeing it, you're not clear, right? And that means there's something hanging things up, and that is going to require a call. It is not uncommon. I think Carl, Byron, y'all can probably attest to this, that something might be hanging up the tax clearance. Maybe it's an old unfiled return for another tax account where you paid an estimated amount instead of a total. You may not have a tax liability, but you haven't filed a return yet or something. A lot of things can hang that up. Let me, if anybody else
And
wants to add to that, I'm going to take them over to the website and show them how you can
while you're doing
request.
that, Katie, let me just piggyback on what you just said, which is super critical. We get this question all the time. I know Carl will say this too, and Byron, you may get it in your shop too, about people that want clearance and they've paid an estimated assessment of X amount of dollars. You're not going to get a clearance until you file a return. Now, that's part of the law, and we have to get filed tax returns and appropriate payments for all periods for all tax types in order to issue clearance. Now, you can't really get out of business unless you have clearance. So you can see how important that is. So it's great to get collections folks not breathing down your neck because you paid an assessment, but it doesn't really solve the problem. The problem is unfiled returns. Okay, so you want to take care of that and address that where you can. Katie, you wanted to show them something, I think.
Right. I clicked on TinTap just to go back a minute from the revenue homepage, which is tn.gov/revenue. Click on revenue help. I'm sorry, wrong place. Click on TinTap. And then, oops, I already had a session going. And then I believe, I think it's on information. Is this where it is? Yeah. So under information and help, you scroll down to obtain franchise excise tax clearance. Easy way to get your clearance letter there, which you will need to dissolve with the Secretary of State. One thing I do want to note, there's a question, even if an entity is not registered with the SOS, is F&E filing required if a business has substantial nexus with Tennessee? Maybe having a remote employee in Tennessee, so on and so forth. So the answer to that, Carl, Byron, correct me if I'm wrong here, but I believe it is yes. If you have nexus, there is F&E nexus that you can have even if you're not registered with the Secretary of State, or would that require you to register as well?
See. Well, I would have to say yes, because every company is not with the SOS, but they'll still be filing returns. So you can have Nexus here in Tennessee and still not be with the SOS. So it really kind of depends on, at least in my view, I'd say what you're actually doing in the state. Because every company is not with the SOS, but of course they have an account with us.
And hey guys, thank you for that, Byron. We do have if you're an out-of-state business and you're joining us today, we do have a couple of cool resources for you. There is a webinar that we have dedicated to Nexus in Tennessee, and it's for F&E business tax and sales tax. But just here, if I can take a minute, I can put that in. I can put a link over to that in the chat for you. But it's in our webinar video library.
I can't
Question.
Go ahead.
I'm sorry, go ahead. I'm sorry, Carl.
Yeah, it's okay. I was going to say I can't recommend enough to look at the tax manual. It has everything.
Oh, yes.
There's three things outlined in the tax manual that would give a business nexus to file. It'd be property, payroll, and sales. And there's actually an enumerated dollar amount for that. So if you have, like, an example, if you have payroll, if you have an employee in the state of Tennessee and their compensation is $50,000 or more annually, that makes a business required to file. That's just one example, but if in our tax manual, the link on page 4 of this presentation is a link to the tax manual. And if that the nexus can be found and Brightline presence and doing business, that's all found between pages 52 and 56. It's all outlined.
And just for a fun fact, the franchise and excise tax manual is 587 pages long. Honest.
And a good cure for insomnia if you have.
It'd probably 600 after this year. It's always things seem to get bigger. But you know what? We joke, but guess what? Isn't it nice to have a resource like that?
It is.
It's great.
I love it.
It's really fantastic, actually.
There was a question in the chat from Shannon asking, how do you know if
Go ahead, Carl.
how do you know if a business is a financial institution? If you go to page 502, there's a flow chart and questions and answers that you can go through, and that'll help you determine if you're in a financial institution. It's like I said, the tax manual is great. It's all there.
I'm going to go over to that. Hold on.
Yeah.
Let's just go to it. This is the revenues homepage, tn.gov/revenue. You're going to click on tax resources and then tax guidance and tax manuals. These are all of our tax manuals. Franchise and excise tax. This is the current one. You can see older versions here if you're doing a return for a previous period, but the current manual and
502.
502.
What I like about it is it's a free PDF. It's searchable. You can type in a certain topic that you're looking for, and it'll go right to it and give you 5 pages of information based on what you're curious about. So there's the flow chart, a more modern version than what we have in the presentation. If you scroll down, you'll see, like on the next page, it'll say the definition of a financial institution, and it gives you,
Mhm.
it's very well organized. I couldn't recommend
And
it
notice
more.
things are footnoted as well. So when if you need to go to that footnote at the end of the manual, you can find code references, regulation references, other subtopics. So the U.S. code references and all that. Yeah, it's fantastic. It really is. One basic question one of our participants had here today was about when you close an F&E account, can you file that final return with your normal return? Well, the answer to that is yes, absolutely you can. And of course, you can mark that last return as final, and that is a key point there too. And Carl, we get questions too about people that maybe forgot to check the final box at different times. They can contact us and we can advise them on that, correct?
Yeah, they can always amend it as final, and yeah, that,
And once they do that, that triggers the clearance process, does it not?
it does. Yeah, our computer will check all the accounts, all the periods in the system, and if there's anything missing, then the computer will send them a letter saying, "Contact us. You have some other." A common
Okay.
thing I see is like business will file a final return for December 24, but continue to file sales tax returns every month in 2025. And the computer won't issue a clearance because they're still filing returns, even if there's 0 returns. That messes up our system. It just confuses our system.
Yeah.
So what we do is we have the sales tax unit has to reverse those returns and close the account, and then that'll trigger the clearance letter. It's kind of like our computer's programmed a certain way to operate a certain way, and it doesn't always catch you know items like that.
Right.
Nuances like, yeah.
I got a question for Byron. So Byron, you work obviously in our audit section, so you see a lot of things that come in that maybe taxpayers had trouble with, and maybe they just don't quite understand. Would you mind mentioning one or two of the main things that you think people could probably benefit from, just overall about franchise and excise tax?
Yeah, and I can't remember if we mentioned it earlier. I know we kind of did when we were talking before, but we mentioned like the apportionment.
Ah,
I know
yes.
if you leave the schedule blank, the system will automatically go to 100. So some of you all might have received kind of like a return adjustment notice or something like that with a big estimated assessment.
Hmm.
But the apportionment really is wrong because more than likely, I guess you were probably trying to do 0. So if you are trying to do 0%, you will need to put something on schedule in, or if not, the system will change it to 100 and probably send you a NOPA.
Like even $1, right?
Yeah.
Yeah, like it has to be something put in there, even if it's like sales in Tennessee 0, sales everywhere $20. It has to be like something in there
Okay.
if you're trying to do 0.
All right.
Yeah, it's like the math teacher that wanted to see how you arrived at your answer. There's got to be figures on that form.
Ashley has a good question here. Is there a link to a mock F&E filing? So I think that's a really good question. If you just wanted to see like how your figures fall into it, you can go to the paper return. I'll show you how to get there. And I believe you would be once the F&E return is available for you to file, which would be pretty much the day after the end of your fiscal year. So if you're 12/31 fiscal year, I believe that F&E return is going to be available on January 1. Y'all correct me if I'm wrong there, but you can go in and plug in numbers in your real return, but just don't submit it. You can cancel out, you can clear it out, but I'm going to show you how to get to the paper return. And also, so online filing is required unless you meet very strict circumstances to be exempt from filing online. But the paper returns are still really good in terms of their instructions for all of our tax types. You can see the instructions for all of them and kind of the old-fashioned way of doing it. I'm going to show you where you can find the paper return, Ashley, while I'm getting there if anybody wants to
Yeah, I'd like to
cover another
chime in.
question.
A page, going back to the tax manual again, page 165 in the tax manual. If you go to page 165, it'll show you net worth it'll be number 1, net worth. So the tax manual, starting on page 165, closely follows the tax return line per line, and it'll give you everything you need to know. Like there's an example of a balance sheet right there on page 165. You'll see number 1. That's number 1 on the tax return. If you're in 10 tab, if you scroll down and go to number 2, that's line number 2. It's affiliated indebtedness. And it'll give you an example and definitions. So page 165 in the tax manual, if you're filing a return for the first time, yeah, it's all right there. It's like having a personal, CPA tell you where you can, the net worth comes right there from the balance sheet, assets minus liabilities,
That's awesome.
and follows the entire return starting on page 165.
That's awesome.
Liz in the chat had asked a question about a federal extension. It's a common misconception that if you file a federal extension, that it files a state extension. It does not. The two systems, the federal system and the state system, do not communicate. So if you're doing an extension, you have to do an extension for both, just so you know.
So the paper formula, I went to our website, tn.gov/revenue, and clicked on taxes and then F&E tax. Under forms, there's lots of forms here, but the current F&E 170 form is right here, and then the instructions right here. And then of course schedules all below here. Prior periods, you'd have to click here, but this is the current period that we're in.
And we're working on the 2025 forms now that'll be posted to the website very soon. And they'll be updated a little bit as they need to be because of legislation.
So Pooja says the minimum $100 is only if you're registered with the Secretary of State. Is that correct? So actually, the answer to that is no, and it's a common misconception. If you are an LLC or a corp, even if you haven't registered with the Secretary of State yet, you're liable for F&E tax based on the date of your formation, whether you've registered with the Secretary of State or not, the date you begin operating, if you are an LLC or corp. Sometimes, even if you just have the words LLC in your name, we assume you're an LLC. So registering with Secretary of State is not the only requirement there.
Let's talk about nonprofits. Do they have to be exempt from this, or are they just assumed exempt?
That's a good question. If a not-for-profit registers with the Secretary of State as a not-for-profit, it's not required to file franchise and excise tax, unless it seems like with taxes, there's always an exception to every rule. Unless they file the 990T with the IRS. Normally, a not-for-profit will file the 990 every year. It's like an informational return. And an easy way to remember it, that 990T, that means you got to file a tax return for franchise and excise with the state.
That's because they're engaged in some sort of business activity as well as being nonprofit, right?
Exactly. Yeah, they're doing some kind of activity that's outside of the not-for-profit status.
Right, which is not very common, but does happen.
Yep.
Yeah.
Yep. Somebody had asked in the chat, sole proprietorships required? No. The franchise and excise taxes on businesses that have limited liability protection. Sole proprietorships don't have that limited liability protection.
General partnerships either. Yeah. Katie, people are asking about CPE, and I've been telling them, hey, Katie's going to tell you about that at the end of the presentation, and you'll be given a link to get over there to CPE credit. I think we got time for maybe one or two more questions. I'm just kind of looking through here. You guys see anything that you wanted to bring up? I just wanted to say that, just to reiterate one more time, and Katie mentioned it earlier, and we get in a slide here at the end. Make sure to reach out to us when you have questions. Okay, this tax is a bear. It just is. It's got a lot of moving pieces to it, and you being part of the webinar today, I think you all realize how big this is. But we do have these folks People like Carl are available at that 253-0700 number from 8 in the morning to 4:30 Central Time every business day. We do something really weird at the Department of Revenue. We will answer the phone. If you call us, we will answer your question.
Yeah.
How about that? And we will actually answer your email too. We've got good folks that are standing around. Yeah, like we don't have anything to do. Yeah, we don't have anything to do, Katie. But
The only
no, we're
time
kind of busy.
the only
Yeah,
time you might wait is if like you're calling on the day of a deadline. Otherwise,
yeah, like April 15th.
we'll
Okay,
pick
you're
up the
gonna
phone.
wait a minute. Yeah.
Yeah.
But no, the point of this is that we have staff available that can that are there to help you. Okay, so make sure you to reach out to us. And
Katie, can you show the place on our website where they can submit a help desk ticket?
Sure.
Is we answer these. We're required to answer these within 2 hours. And what's
Yeah.
great is that you'll have something in writing that you know has been researched and
So from tn.gov/revenue, click on Revenue Help. This is also where all those articles are housed. And then from Revenue Help, you can also just send the email revenue.support@tn.gov, but this kind of routes it better. You go to scroll down to the bottom of Revenue Help and do submit a request, and it's just a really quick little form. Tax questions, your email go to subject, and then you specifically say which tax. That will quickly route it to the correct
yeah.
person on our team.
It's like if you can't get through on the phone, like on a rare occasion, usually I'm usually sitting here 15 minutes waiting for a phone call to come in, and I'm answering those help desk tickets and emails and stuff. But
and we get
yeah,
questions by email all night long because people will ask us questions from other countries, that are dealing with Tennessee.
Right. Yeah.
So, Katie, what else is going on with upcoming
Yeah, we
webinars?
got to wrap things up here. Just wanted to recommend to any business and all tax professionals, follow us in as many ways as you can. We put out good information, especially if there's information about when law changes start happening here in just a few months. All of our notices and stuff will be posted that way. We have a couple webinars scheduled coming up next month. The last Tuesday of the month is always our tax webinar, unless that falls on some kind of holiday. But next month is refunds and penalty waivers. December is books, records, and statute of limitations for all new businesses or CPAs that communicate with new businesses. Recommend our new business workshop. You can click if you've got the PDF, this links you directly over to it. And just want to say thank you all for joining us today. And Byron and Carl could not have done this without you guys. Thank you, thank you, thank you.
Excellent. And please email us and call us. We know we did not get to everybody's question. We knew we wouldn't. There's just too many people, but we thank you guys very much.
And again, if you need CPE credit as you exit, there'll be a survey. Just make sure if you do need CPE credit, you put question 5 says, how do you want your name listed on your certificate? Also in the free form, there are ideas or topics for future webinars. If there was something on this webinar that you really think you need to have another webinar on to dive deeper into, I'd love to hear your thoughts on that and compile all that and see if we need to have one that dives a little deeper into a specific filing topic for F&E. So thanks again. Have a great day, and we'll see you next month.
Thank you, everybody. Thanks, Gabe.
Bye, everybody.
Bye-bye.